Welcome back, everybody, to Blockchain Week, day 4. We're just returning from a short break to the third section of the day, I guess. So we're just about to jump into a session. It is titled Meeting Global AML CTF Standards, Navigating Compliance Challenges and Opportunities for Digital Assets. But our speakers, I was hoping that perhaps they might be able to have a chat with me in the meantime. I'm going to put them on the spot. Stephen Pettigrove, Special Counsel, Alderman, Derham, Managing Partner, Holley, Nethercote. John Bassilios, Partner, Holley, Wilcox. Louisa, Senior Legal Counsel at Australian Payments Plus. I know you might not quite be ready, but this is Blockchain Week 2023, day 4. And I have seen all of you at a few sessions at Blockchain Week. And I was hoping that perhaps you might want to tell us a little bit about your experiences thus far before we went into the session. So I'm going to ask, I wonder which one who might like to come on board. Stephen? How are you?
I'm good. Yeah, look, I was in attendance for day 1. I thought it was great, a really wide range of discussions and a really wide range of people in the room from all parts of the blockchain space, which is obviously huge and diverse. So I had a lot of good conversations and I've really been enjoying it so far and learning a lot, actually.
And you hosted, Alderman hosted the Lawyers Forum during the Fringe Festival, the Web3 Fringe Festival. How did that go? And what was the attendance like and who was in the room?
Sure. So we had about 15 to 20 blockchain lawyers in our Sydney office on Tuesday morning. It was the first time I think we'd got all the blockchain lawyers in Australia effectively in one room, or most of them. There are a couple of late withdrawals, as tends to be the way with lawyers. But yeah, it was a great chance, I think, to collaborate, exchange ideas, and under the flag of the Blockchain Lawyers Forum, which is a relatively new organisation that exists in a lot of other jurisdictions around the world, but is particularly important, I think, because there are so many legal issues in the sector that are changing and evolving, and sharing knowledge, I think, is really important.
Louisa, how have you found it? I have seen you at the Blockchain Week events as well.
Yeah, thanks, Amy Rose. It's been really good to connect again with a lot of people in the industry that you just haven't seen in person in a really long time. So I actually used to work at Piper Alderman before Stephen joined, and that was 2018. So since then, it's been amazing to see a lot of new faces as well as old faces that just interested to find out how they're doing in the space and what new projects they're working on.
So did you go to the Lawyers Forum on the Tuesday morning?
I didn't get the chance to go to that one, but I was in most of the events on the Monday, which was fabulous.
Yeah, beautiful. Well, look, thank you so much for joining us today. We'll jump right into your panel session. I could talk about Blockchain Week forever, as you probably know, but this is not about me and my obsession with events. This is about you and having a chat about AML CTF standards. For the audience who are listening, all of these events today are obviously recorded. That these events will be put online afterwards, but we're also going to be generating a report that will take the key elements from every single session, and we'll be doing a write-up that will extract what that global regulatory landscape looks like, what innovation looks like, and showcasing some of the key points that our speakers have made today. And it's going to be a really interesting read, I think, and a unique Australian perspective that we haven't really seen a lot of on the global stage. So without further ado, so Stephen Pettigrove, Special Counsel, Piper Alderman, Paul Derham, Managing Partner, Holley, Nethercote, John Bassilios, Partner, Holley, Wilcox. And I'm here today, can I just say, John set us up here at Holley, Wilcox to run the Blockchain Week Day 4 online session, and they have treated us like absolute royalty. It is just, they set the whole, we've got 2 rooms here. all the computers set up, everything ready to go. So thanks, John, for setting that up. It's a beautiful space. I'm not showing what's in the background. We're in a high rise. It's in beautiful, but buildings in the background, but I can't because it's too much glare for the computer. And Louisa, Senior Legal Counsel, Australian Payments Plus. So without further ado, welcome to the stage, and we will get the party started. Thank you.
Thanks very much, Amy Rose. So our topic for today is meeting global AML CTF standards, navigating compliance challenges and opportunities for digital assets. This is a really important topic, I think, for people in the digital asset space, but also financial institutions more broadly. There's as we'll talk about, there's a huge number of legislative reforms that are kind of underway and planned, and there'll be moves to implement increasingly FATF standards in Australia, in particular AML CTF compliance in relation to digital assets. And as we'll discuss, there's also quite a lot happening on the technology side as well. So new ways to comply with those standards, but also new challenges, including in an environment in which, or an elevated cyber threat environment. Let's put it that way. John, I'd love to start with you. The Attorney General recently completed a consultation on these proposed AML CTF reforms, and the aim is to simplify the existing framework, but also to bring Australia into line with FATF standards. Are you able to just comment for me on the scope of those proposed changes, particularly for digital assets?
Yeah, sure. So at the moment, in Australia, digital currency exchanges are only required to register with AUSTRAC if they provide fiat on-ramps or off-ramps. The proposed consultation paper is looking to exchange the ambit of services that would be considered a designated service under the AML CTF Act, and that will include exchanges of one digital currency for another, the transfer of digital currency on behalf of a customer, the safekeeping or administration of digital currency, and the provision of financial services related to an issuer's offer or sale of digital currency. In addition, and quite specifically, well, it's not limited to digital currency exchanges, but is very relevant to them, is also the introduction of a new travel rule, which requires regulated entities to basically obtain and share payer and payee information.
Thanks, John. We obviously hear a lot about the travel rule in the digital asset space, particularly because of some of the challenges that presents in the digital asset space in terms of implementation, and in terms of both capturing that information but also sharing that information. Are you able to expand a little bit on some of those difficulties?
Yeah, sure. So one of the first issues that is a significant challenge is interoperability. So there is not one sort of global standard that exists that everyone will necessarily use. So people might use different softwares or solutions which may not speak to each other. Another issue is the kind of the sunrise challenge to refer to, and that's where other countries may not have implemented the travel rule or implementing it at different times, and therefore the exchanges in those jurisdictions might not be able to receive the relevant information or provide it. There's also what's referred to as the discoverability issue, which is an issue associated with finding out who the relevant counterparty that you're transferring the crypto assets to, and whether or not they are a virtual asset service provider that is also required to meet the travel rule requirements. There is also issues associated with verifying that the travel rule data is sent concurrently or prior to the transaction data. And there might be different circumstances in which the travel rule, where it is even implemented in another jurisdiction, applies. So for example, there are some jurisdictions that are considering like having a minimum amount that applies to the travel rule applying, such as $1,000 or $3,000. So they're just some of the issues that have been identified to date.
Thanks, John. Yeah, and some of those issues come back really to the uniqueness of the technology as well. Obviously, in a normal banking environment, you can't really set up a bank account without a bank, whereas in the context of digital assets, someone can set up their own wallet and control their own digital assets, which means it will present additional challenges for digital currency exchanges, for example, in identifying unhosted wallets and beneficiary or recipient information in relation to persons who are controlling those wallets. One of the other aspects, and I think unfortunately Paul seems to have dropped out, and I'm sure he'll be back in a moment, is in light of some of those difficulties, the extent to which the travel rule will be applied for mobile transactions. That's in other jurisdictions something that's been a cause of a lot of debate. In terms of where we're at the moment, an initial consultation, as John mentioned, has just been completed, but we are expecting further consultation on the details of that later this year. So for those who are in the digital asset space in particular, and I think digital currency exchanges will be key here, but also those other providers who might be brought within the scope of the changes, it'll be really important to scrutinise any legislation to make sure it's practically workable and conforms to the technology. I don't know, John, whether you want to expand on that a little bit.
No, I think you've covered it well. Probably don't need to go into much more detail on that. I think other than to say that the paper that was released was conceptual in nature, and we don't have any sort of draft legislation, and the Attorney General was just seeking feedback on issues that we identified, or consulting with the industry to see what issues might arise as a result of implementing these changes.
Great. Well, we might change tack slightly and talk a little bit more about sort of data in general, and that's an important point in the context of AML CTF, obviously, because you have digital currency exchanges or others who are covered by AML CTF laws gathering huge amounts of personal data, and in the environment in which we operate now, obviously, that creates something of a honeypot of information for hackers and other bad actors to target. Louisa, you work with the Payments Plus platform, and I'm sure have some visibility over some of these issues and the balancing of them. Are you able to give us some insights from your experience?
Yeah, sure, Stephen. So with AP Plus, we have a few schemes under our belt and also have our own digital wallet, Beam, that we provide from the legal team, we provide advice to. But from a scheme level, we think about data all the time because we have so many different players that is on our network, on our scheme. So for MPP, we have all the banks on the scheme, as well as identified institutions that connect through the banks, then through the MPP, and we have ways to manage that data that ensures that it is safe. From a Beam and more of a fintech perspective, the problem has come up where we think about AML and data protection, because the requirement to collect and verify identification for your customers is well known, but now that it interplays with cybersecurity so much, we're looking at like, how does the data actually flow through our systems, and whether we need to actually collect the data in the fullest form that we originally imagined we need to from a compliance perspective. So AUSTRAC has come out to say that, you know, if you use DVS and you're using that service to verify the credentials that you've received, whether you need to, what do you need to actually store? Because once you store it, if you collect, say, a driver's license or a passport, once you do collect it, then you need to store it for 7 years. So backtrack a little when you're in the design phase, or even when you're looking at the data flow. How can you manage that without actually having to collect the whole copy of the entire ID, rather than certain data fields from it that can help you manage your obligations, not only from an AML CTF perspective, but also from a privacy perspective? I think having those people in the room when you're making those decisions are really important. So you have your AML compliance officer, but you also have your lawyers and the privacy experts and your data experts, because it does make a difference in how you plan out and manage those aspects of the product that you're providing. I think also important to note is the changes to the Privacy Act that's coming in, and if we're changing, if the changes do go through around the definition for personal information, that it is captured not only about personal information, but it also is broadened to relates to personal information. There's a lot of data in there that we either touch from a compliance perspective, but maybe more broadly from what the product that you're offering, and that inferred information around IP. You know, if you can see where public wallets are going and coming from, that could create another element to considering the AML compliance requirements.
Thanks, Louisa. We've got Paul back with us, which is great. I'd like to bring him in here as well. Paul, you obviously work with a lot of clients in this space around AML issues and data issues as well. How are you seeing them navigate these tensions, and is this an area that potentially we need some reform to navigate?
Stephen, hi everyone. Good to see lots of familiar faces in the attendance list as well. And look, I'd echo what Louisa just said. A big issue, obviously, that we've all been talking about is when can we destroy documents, and it is a risk-based approach, and the law does have a 7-year record-keeping requirement for certain things like transaction records, etc. And yeah, we have been asking AUSTRAC to clarify electronic verification and when that can be the only record on file. The problem is for the 20% of people you can't electronically verify. There's no quick solution to them. You've got to keep things like copies of passports or driver's licenses on your files, and no one wants to do that. So that's a hot issue. And I think with the privacy reforms coming, there's going to be there's a whole wave of regulation coming in Australia that may go beyond the GDPR standard that we've become familiar with coming out of Europe. So yeah, I think the hottest issue is record keeping, obviously for cyber reasons and data security reasons, and then coming, in conjunction with that is a privacy issue.
Thanks, Paul. Louisa, I'll bring it back to you. We'll change tact again a little bit and talk about tipping off, which is obviously a big issue, and one where potentially there's one of the issues that we face really is coordination and collaboration in terms of some of these complex financial crime challenges. And one of the issues that's been put on the table by the government for potential reform is the tipping off offence. For those who aren't familiar with that, effectively it means that where you are providing information to AUSTRAC or subject to AUSTRAC information requests in relation to anti-money laundering matters, there are restrictions around your ability to share the information that you are providing to AUSTRAC. And that does create some challenges. Louisa, perhaps you can comment further on that from your central, I suppose, hub in the payments ecosystem.
Yeah, sure. So with tipping off, it comes, when I think of it, I think there's 3 main ways that you could potentially think about it and where it might come up. So one, with the customer itself. So you're trying to, say, offboard a customer, you've either suspended their account or in some way made a decision based on your risk appetite, or you've submitted an SMR and you do need to take steps with the customer. The second one is around your related entities. So say you've decided to centralize some of your operations overseas, or you've used a third-party provider. How does the tipping off provision come in when that when you need to share information around the SMR that you've just submitted? The third one would be with other entities, so private to private. So say you're looking at a fraud or scams issue, you need to talk to the payer participant or the pay participant, and you need to converse around investigations into trying to pull back money in one way or another. And I think at the moment, given how the legislation is drafted, it's more on an exceptions-based approach. So you're looking at, shouldn't tip off except if you meet any of the exceptions. It does become really complex to actually get to the outcome that you're looking for. So in the consultation paper, they have noted that we should look to really honing in on the key problem, which is some way impacting the law enforcement of certain, breaches of laws or things that they are trying to enforce from a law enforcement perspective. So I think that will be really good, so that it just reduces some of that regulatory burden, because it does come up a lot where we're trying to find a solution to manage fraud or scams or manage communications with customers, and tipping off becomes one of the key issues that we have to address. But I think if we do have new legislation that comes in providing that greater flexibility around different ways that businesses structure themselves, and also the need to share private to private information to manage investigations, it will be a welcomed change.
Yeah, thanks, Louisa. It is an interesting one. I suppose at some point at the moment, having a very prescriptive approach gives people a sense of confidence, because they can read between those exact exemptions and either apply them or not, albeit that's quite an onerous exercise. Flipping it on its head and turning it to a less prescriptive, not compromising an investigation test will make it a little bit more vague. It'll create flexibility, but it will mean people need to exercise some judgment around those things. So it'll still be something to watch. I think it's a welcome development, but one that will create, I suppose, some still compliance risks that people need to manage and put some processes around.
And I do think a lot of businesses will err on the side of caution if that becomes more of a risk-based approach. And I don't think it will change the communications from a customer's perspective. It will be more of the others around your related entities and using third parties, or, doing investigations, the private to private information sharing.
And I suppose one of the other benefits as well is it'll bring us more closely into line with the way it's done in other jurisdictions, so the UK, for example, which should, to your point, allow better sharing of information between entities across jurisdictions as well. Great. Well, we might move on then to talk a little bit more about scams as well, because that obviously has a close interlink with anti-money laundering as well. Paul, in recent months, we've seen some banks and payment providers take steps to restrict fiat transfers to DCEs in order to combat scams. Do you think the government's proposed reforms in relation to AML and CTF, which will obviously significantly expand the scope of the existing legislation for virtual asset service providers, do you think those will help in addressing some of these issues around scams?
It's a question that we're all asking. I think it'll help in the longer term, but I don't think reforms will help in the shorter term. I mean, the real issue for the people watching this webinar that are trying to run a digital currency exchange or some business that's involved in crypto in some way, or just a fintech or a payments business, all of those sectors, the main issue is banking access to the banking rails, and the banks are squeezing those lifelines because of scams. That's one of the main reasons they're quoting. I think the reforms will help increase capacity in the regulated population. As they get more regulated, the banks will trust them more, and that's been acknowledged recently. This week, the government has responded to the Council of Financial Regulators' recommendations on debanking, which came out last year. So I think it might have been yesterday or the day before. The government has responded saying, actually pointing that out. We think with all this regulation coming, there will be an increased level of trust that the banks have with the sector. Can I just talk about that for a moment, Stephen? Because it's pretty fresh. It's hot off the press. So the government has responded to, so the Council of Financial Regulators have been looking at this debanking issue for ages. Our firm's been called into some meetings with them, along with some of the big payments businesses and crypto businesses. And they eventually made recommendations late last year to Treasury saying, hey, there's 5 things you need to do to make debanking less of a problem. None of them were solutions, really. They were things like make sure the banks record data, make sure the banks communicate reasons for debanking, make sure the banks communicate reasons, their risk parameters. And by the way, there's no legal basis for Treasury to compel the banks to do this, really. So we're just going to suggest that you ask them nicely. And so anyway, the government has responded and agreed with the Council of Financial Regulators' recommendations. The key one for those people watching that are affected by this issue is recommendation 3, where the government agrees in principle, which means it kind of agrees, and it'll probably do something about it. And that recommendation 3 is saying to the banks, you must communicate your requirements and your risk assessment on the digital currency exchange and the fintechs and the payments businesses on whether or not you'll bank them. So that'll be really helpful if Treasury comes out with some really strong messaging to the banks and works with them to actually put out that information. Then the banks will have to admit whether they're even willing to bank a single DCE, save everyone hundreds and hundreds of hours. Anyway, but no legislative ability to compel the banks to do that according to the CFR paper. So anyway, that came out this week. It's pretty topical. Yesterday, Blockchain Week called a meeting on Tuesday for debanking, and the banks all said they'd turn up, and then they all cancelled. So there's a problem. There's a problem with the industry at the moment, which we're all talking about. Anyway, I've sort of answered your question and a bit more. Probably talk to them.
Yeah, thanks, Paul. I mean, and that message from the CFR is also consistent with what Austrac has been saying as well, and they've issued some recent guidance warning against debanking and preaching closer collaboration. One of the real sort of practical reasons for that is they're concerned about sort of going dark in certain areas of the economy, not having visibility over it. So the odd thing about this debate is, in some ways, debanking and all of that, it actually is counterproductive around AML, CTF compliance. And the more visibility, the more information sharing collaboration there is, actually that should help to address the problem. So I think, I don't know, John, you also work with a lot of clients in this space. Do you want to weigh in on this topic as well?
No, but it's probably just worth really mentioning a couple of things. The guidance that was put out by Austrac basically says you shouldn't debank people just based on a particular industry, and you need to undertake a risk assessment based upon that particular client. I think the banks were probably doing that anyway, to be honest, because some exchanges are banked and some aren't with the banks. So I'm not sure that it's going to have a real practical impact. My personal view, and I don't really come across many people that share this personal view, is that every individual and business in this country should have a right to a bank account, because you cannot operate in this economy without a bank account. Now, there would be certain caveats to that where, certain activities are deemed to have actually occurred associated with money laundering and terrorism and whatnot, but that's a personal view, and hopefully some people will come around to that view in time.
Yeah, it's an interesting one. It kind of feeds into the broader Bill of Rights type debate as well, doesn't it?
Definitely.
Let's change tact just in the 5 minutes that we've got and talk a little bit more about technology solutions. Obviously, regulation creates a lot of complexity. We've seen advances in the technology space that have enabled electronic verification, for example, and other steps to make these challenges easier. Louisa, I know you're also quite across this space. Interested in your views on technology and how technology can help to solve some of these compliance challenges, particularly as we have increasing regulatory complexity.
Yeah, sure. I think it's interesting to note, just to go back to some of the conversations before with the FAT of recommendations, that we will see the travel rule coming. We will see interoperability being a real issue, and having the connection between existing financial services requirements and the information flow that is required really to play in this space. So one thing that I can see being a game changer, I think, anyone in this space is if travel rule and the FATF recommendations are, Australia is required to adopt them at some point, but just when. If we're in the design phase, or fintech is in a design phase of how to collect data, to be able to collect some of that beneficiary information that's coming through, and really foreseeing some of those requirements that will be in place in the future, and how to be at that level and sort of plan for it. So bringing back to AML CTF, there are solutions out there around RegTech solutions for the travel rule that's already implemented overseas. I know there has been challenges with them, whether that is right timing of when you do that compliance. So they've talked about the checks and the sharing of the information is done after the transaction has gone through. But what about, is there solutions, even if it is after the fact? Adopting it now in our jurisdiction helps us become a more regulated and more compliant industry, and more favourable for investments and growth in the blockchain space. So I think there are certainly solutions out there. There is Connect ID and identification solutions out there to help with AML CTF compliance. There's a myriad of ways of, even with data, and seeing how that can help with really being a game changer in compliance.
Yeah, no, I agree with all of that. And I think the other thing to watch as well will be sort of emerging technologies. So we think about things like zero knowledge proofs, for example, and the ability to prove that you're a sort of verified person without actually sharing your personal data. So from what I've seen, those technologies still at the relatively emerging stage. But I think as the Attorney General's looking at these issues, it'll be important, I think, to not necessarily just think, oh, everything can be done in the way that we've always done it. We need to kind of accommodate new ways that will facilitate in an easier and more cost-efficient manner as well. I'm conscious we've got two minutes left. I don't know whether, Paul, you wanted to add anything particularly on technology.
I agree with what you just said, Stephen, about zero knowledge proofs. There's a lot of great technology where you don't need to share people's data, and you can just bring a database or some sort of secure location. I think whenever governments, if we go back to the first question about the current AGD looking at reforming the AML CTF laws, they always try and be tech neutral, but sometimes eventually that fails because we can't imagine what technology will allow. And so just continuing to push for tech neutral obligations, and really and for the government to provide guidance on its approach to adopting or accepting the use of new technologies. I think that's something that's really helpful. And I know some people watching this are from the regulators. So just using some of your time as a regulator to look at some of these technologies and commenting on them publicly will really help. Yeah.
Thanks, Paul. I think that's all we've got time for. It's been a great discussion. I'll kick it back over to Amy Rose, who'll introduce the next session. Thanks, Amy Rose.
Thank you so much, Stephen, Paul, John, and Louisa. That was wonderful. Touch over my head, but I'm sure all the lawyers out there were fully immersed. So thank you so much. I'm really excited about the next session. I've got to know XDC